Welcome to Scope's Portfolio Manager Conference. I'm your host, Man Ching Sun, mutual fund analyst from Scope Analysis. For this session, I'm very pleased to be joined by our guest speaker, Sam Richmond-Brown, Client Portfolio Manager at Thematic Asset Management, which is an affiliate of Natixis Investment Managers. He's joining us on the line today from Paris. Good afternoon and welcome, Sam.
Hi, nice to be with you, Man King.
Our discussion today will tap into thematic investing, rapidly growing investor appetite, and the strong performance during pandemic has led to a proliferation of thematic-related equity products, particularly in Europe, where the region account for a lion's share at over 60% of the global thematic mutual funds. On the other hand, concerns over a thematic bubble also raise the question of whether the trend is there to stay and how it copes with a tech bear market in a high interest rate environment. Sam and I will discuss questions around these topics and talk about some of the key themes his Thematic's MetaFund team is watching right now. Before we start, I'd like to remind you with few logistics. We'd love getting your questions, so please keep them coming throughout. We'll do our best to answer as many as we can. A webinar replay will be made shortly after the live event. You could rewatch the clip on our Scope Explorer website under Video on Demand section at any time you want. So, Sam, I really want to talk to you today because here in Europe, we really see a growing interest in thematic investing, especially for younger marginal investors who wish to gain exposure to themes rather than few sectors or geography. But still, for audience who are not yet so familiar with the concept, or take me for example, the name itself is self-explanatory enough, but I'm not so sure that I get the details 100% correct. So first, to put meat on the bone, what is thematic investing and what's the appeal of it? Do they often focus on one particular industry or sector?
Yeah, thematic investing is quite a broad topic, but obviously, I think it's fair to say that equity investing takes a view on the future, and thematic investments really enable sort of investors and clients to link their vision of the world, essentially, with its evolution directly to their investments. So obviously, with an abundance of research and data and sort of opinions at our fingertips in today's pretty fast-paced world, it's easy to try and or easy to fall into the trap rather of trying to chase the next fad or the next fashion by identifying kind of the best tactics, strategies, or securities to buy right now. And without an overarching philosophy to bring it all together, one would be simply, chasing one trend from the next while losing kind of money on the way. And thematic investing is that philosophy, is what it really, comes down and boils down to. It's all about primary forces, having greater perspective, understanding secular shifts in the world as it transforms before our very eyes, and obviously, identifying long-term trends that are transforming the ways countries are governed, that we live as societies, and how essentially companies are run and how the money is flowing. And so certainly, thematic investing differs from fads or micro trends in that we believe that thematic investment strategies really share three common traits or common characteristics. They're long lasting, first and foremost. They're broad in scope. So essentially, you're not focusing on a niche, but you're focusing on something that's far broader in terms of a trend. And last but not least, they're impactful. And so, when we design thematic investment strategies, we really leverage and articulate these powerful long-term forces that are really reshaping the world as we know it. And that can be as diverse as evolving demographics through to, innovation breakthrough and technological advancements, but also globalization and to an extent kind of resource scarcity all shapes our thematic view of the world.
So I would imagine by nature, it clearly somehow leans towards mostly tech-heavy equities. So is thematic investing just another way to invest in growth stocks or chasing high momentum in each sector? How do you define structural change?
Yeah, so I mean, structural change, as I mentioned, is very different from fashion or fad or short-term trends. Obviously, you mentioned growth, momentum. Momentum can be short-term in nature. Structural is more about long-term changes, and obviously, structural changes really weather the test of time. So if you think about, technological evolution, that has application obviously to the digital world, but also to the real world. So technology is everywhere. So it's important to go beyond that simple sector view in understanding basically end market applications with regards to some of these technologies, and basically the impact, that maybe some of these more technology or industrial focused strategies are providing exposure to. Obviously, the survival rate for a fashion or a fad, or for a momentum trade is relatively short lived. So again, structural change is very different. Taking a thematic view goes beyond basically simply allocating in technology stocks, but really takes a far broader perspective. And obviously trends and short term fads come and go. Structural shifts are here to stay. So it really is important, when thinking about a thematic strategy, to have that balanced view. I mean, certainly, from our perspective, thematic investing is understanding first and foremost how these secular changes, the fact that we're far more numerous on this planet, evolving demographics, the implications that has on infrastructure, on transportation, on the food chain. But obviously, digitalization, in addition to kind of resource scarcity, all forms the basis of our thinking when we think about sort of a theme, as obviously being able to offer, and first and foremost, it's all about being able to offer economic growth that outpaces basically global markets on a durable basis. So again, I mean, thematic investing, and the appeal of thematic investing is far broader than simply allocating to growth, or certain sort of areas or sectors of the market.
Mhm. So bear with me one last question on the basics. I'm just curious about how do you evaluate performance? Traditionally, for equity portfolio benchmark is where they anchor and populate portfolio. What is it like for thematic funds? How do you evaluate performance?
Yeah, I mean, I think obviously it's important to take a step back, and when we look at sort of thematic equity strategies, obviously it's all about generating attractive performance over the long run, and especially in a low growth environment, harnessing sources of secular growth provides exposure to product cycles, to innovation cycles, rather than being subject to kind of the broad economic cycle. And as such, at Thematic's asset management, we've designed very specific investment universes that encapsulate a lot of the growth attached, to what we believe to be these secular growth opportunities. And we'll get into that in a bit more detail. Now, essentially, the way that you evaluate performance really doesn't change. I mean, if you think about it, evaluating performance can be done on a relative or absolute basis. But I mean, obviously, maybe taking a step back, looking at basically how you're compensated for every unit of risk you take. And risk can be measured in a variety of ways, whether that's value at risk, whether that's volatility. But certainly, again, measuring basically the added value through an objective performance, and analytics seems a good starting point. That being said, I mean, as you mentioned, a lot of these strategies tend to be benchmark agnostic. So tend to deviate obviously from global equity indices. If you thinking about it, I mean, what we're doing is designing investment universes through basically a very different view, a different angle, distilling these opportunities as a function of what we believe to be these primary forces, that are really transforming the world as we know it, and offer secular growth opportunities into the future. So if you think about safety, if you think about artificial intelligence and robotics, water, or the wellness or subscription economy that are all sort of embodying or embracing consumer change. We think those are very unique perspectives. That being said, I mean, certainly at our level, and we can pinpoint to some of the characteristics that we use in terms of evaluating performance pretty easily. But if we think about it, I mean, what we provide to certainly our investors is a view on basically how a strategy or a multi-thematic or single thematic strategy can perform, and then break that performance down basically into contribution. And that's what we find is kind of a very meaningful way of or illustrating performance of maybe something that's kind of more multi-thematic in essence. So as I mentioned, on this strategy, it's just referencing the performance of our sort of multi-thematic meta strategy that aggregates and encompasses all of our single themes. And we'll get into how we do that in a bit more detail, because we think that allocation and thematic allocation is key when you think about that. But also looking at how these individual themes complement each other or react or perform and contribute to overall performance, as shown in this slide here, is very important. You see that artificial intelligence and robotics, safety, the subscription economy, or even water all have very different risk profiles and tend to be additive during different market configurations. But again, over the long term, bringing each a very individual flavor to a multi-thematic portfolio, embodying a very unique growth opportunity.
So with that all being said, how can investors incorporate thematic investing into their asset allocation process? I think you've touched base on that before.
Yeah, I mean, certainly, if again, if we sort of, to an extent, if we take a sort of a step back, certainly, I mean, as I mentioned, thematic allocations, thematic strategies come in various shapes, forms, and sizes. Therefore, from an investment perspective, I think it's for every individual client and investor to really first define an objective with regards to kind of the incorporation of some of these thematic strategies. And basically, if we think about some of these unique growth opportunities and the ability to kind of incorporate them into the portfolio, we think that some of these strategies can be really incorporated in three different manners. So, if you think about it, obviously some of these thematic strategies that focus on very specific segments and areas of growth in the market can complement a core equity allocation by providing that sort of satellite exposure. So, investors we've witnessed often use sort of thematic investment strategies to complement and enhance core allocations. Um, as sort of a performance kicker or a diversifier within a portfolio. One methodology that obviously an investor has put forth to us was kind of looking at a thematic momentum strategy. So every quarter, picking the theme which over the past 12 months has done best, and then basically within that theme, picking the best manager. So certainly complementing the core of an equity allocation with a thematic investment proposition could be of interest. We've also seen clients and investors sort of replacing global equity exposure with thematic allocations. If you think about it, some of these secular growth strategies, it's pretty easy to or it's relatively comprehensible for an investor to understand basically and quantify and qualify the growth associated with each of those investment universes. Certainly, is a far more effective allocation tool than trying to figure out whether the US is going to outperform Europe or whether large caps are going to outperform small caps over the coming period. I mean, you really using kind of a thematic approach as a core allocation within kind of a multi-thematic strategy design is something that we've seen kind of gradually also replace global equity exposure. And then, I think also kind of putting thematics at the core of an equity allocation is important. We have seen clients and investors using multiple themes to provide their exposure to kind of global equity markets. And that really helps inform, again, a growth opportunity and construct a portfolio where you're looking towards the future. So you may be underexposed structurally to some legacy areas or segments or sectors of the market, but certainly you're providing that ability to basically participate in future growth based on secular changes. So again, allocating to areas of the market that are growing by design based on some of these primary forces.
Mhm. So there are also a lot of homework leaving for left for investors to do. First pick up a winning theme, pick a fund that will ride that theme and survive, and buying before the market has priced in the theme's potential. So when it comes to trends and for the team to capture the zeitgeist, the question is really about timing. So particularly in disruptive tech or e-commerce sector where market often overreacts to exciting new development and then falls to the hype cycle. How do you test where you think investors may be too early or too late to a theme? How to benefit from the behavioral buyers, so to say? Can thematic investing help investors to position across these spaces?
Absolutely. So I mean, timing in our view is basically not our area of expertise. So we're by no means tactical asset allocators. We believe firmly in adopting a long-term view and a balanced view around sort of thematic strategies in general. Man King, to your point, obviously, with the current environment of the direction of travel really hasn't changed, but the speed has. Examples that you mentioned, businesses and individuals sort of needing to continue working and operating remotely, has really thrown a sort of a wench into really a paradigm shift in terms of the way that sort of businesses operate, and the whole sort of IT infrastructure, IT architecture has been totally revisited within that paradigm shift. But you mentioned the acceleration in e-commerce spending, obviously businesses reinforcing their online presence, and also new segments emerging. Whether that be online educational platforms, online health, but greater need for cybersecurity. Certainly in relation to the real world as well. If you think about regulation, sanitation, those have been important drivers and catalysts for some areas of the market accelerating significantly. But to be honest, I mean, from our perspective at Thematics Asset Management, what we look at is basically, long-term implications. Obviously, we don't see the trends subsiding, whether it be in terms of, the adoption of artificial intelligence and robotics, which is just becoming far more prevalent in everything that we do, whether that be industrial automation, medical automation, office automation. These trends are here to stay. Our job as an active portfolio manager is to identify the companies that are best positioned to obviously benefit from these forces, but are ideally positioned to take market share and grow. As you mentioned, I mean, it really is a question of sorting the winners from the losers as well. So, generating a lot of hype around the latest IPO is something that we've witnessed time and time again. However, when you put that into context, plan out basically, expected growth, the total addressable market, and obviously valuations. From our perspective, getting your timing right is important. However, being allocated in the long term is even more important. So, if you think about it, we're in the business of identifying tectonic shifts that are really shaping tomorrow's world, affecting companies as well as the flow of money, and that can include anything from secular growth through increasing population growth, as I mentioned, but also regulation, and we'll get into a few illustrations around how kind of regulation is also providing catalysts with regards to certain industries and certain segments of the market. But more importantly, digitalization, mobility, transportation, all formulate our thinking, and this is something that's long term by nature. A second point, as you see in front of you there, we believe it's important for investors to really be aware um, of how they're able to quantify and qualify the opportunity. So, at Thematics Asset Management, we like saying that we know a lot about a little. So we focus on very specific segments of the market that are generating revenue through these themes, that obviously are growing through exposure to these shifts in long-term changes of behavior. But we want to be focused. You want to have a reasonably sized investment universe that can really select companies that have very different, business models, end markets, and come from very different sectors. So again, not just thinking about chasing the next fad or essentially, the next trend, but also allocating to what we believe to be, sound companies with robust fundamentals, and attractive growth perspective. And the best way to do that is not being chained to a benchmark or to a reference index. You want to have that degree of freedom to identify basically companies that may fall within the small, the mid cap, even the large cap spectrum, that are able to benefit from these changes that we're all observing. And I think one interesting point, as a result of these thematic investment strategies, you know, to your point, gaining more and more traction, there's a lot of alignment there actually with responsible investment criteria. If you think about it, where essentially investing in the industries that are turned towards the future, adopting sustainable practices, and by design, obviously, are not representing legacy harmful industries that we believe are something of the past. So extra financial criteria is something that we look at also very closely. And a lot of these thematic strategies align actually with some sustainable development goals pretty naturally, that we think is obviously a long-term investment strategy also.
So before we dive deeper to specific themes and trends, let's have a look at your Thematics Meta Fund. The fund launched in 2019. Over the 1 year horizon, the fund outperformed its peer group with a return at 36.9% versus 33.9% of its peer in global equity. So could you draw a picture of your investment team? What are their roles? How do you divide the workload?
Absolutely. So, I mean, one of you mentioned the performance and the positioning, and, when considering a multi-thematic strategy, from our perspective, it's understanding, how you allocate at the individual theme level as well to ensure performance consistency over time. It's all, if you think about multi-thematic investing, it essentially boils down to resilient growth, companies that obviously are transforming the world as we know it, but more importantly, essentially, that are providing mission critical services that we think obviously are going to benefit clients and translate into obviously robust performance over time. And if you think about the mission critical nature of safety, once you start spending on digital safety, on physical safety, you don't tend to backtrack, whether you're a company, whether you're an individual. Water, likewise, is also a mission critical component, not only to us as a society in ensuring sort of access to quality water for consuming purposes, but also, as an industrial input, for instance. Artificial intelligence and robotics, likewise. I mean, automation is something that is really transforming every area of the economy. So and likewise, we believe that here, what you have in front of you here, the subscription economy is a very unique theme that provides basically exposure to the way that companies are monetizing services and products in a far more sustainable fashion. And so each of these individual strategies are incorporated or encompassed within our Meta vehicle. And Meta, tends to invest across these five themes. As I mentioned, we're not in the business of timing equity markets. So we equally weight each of those themes within Meta. And that's something really important to investors that are allocating or investing to multiple themes. I mean, we've put a lot of time and done a lot of research into how each of these individual strategies correlate to each other. And what we've witnessed is that, if you think about these strategies, they have very independent, autonomous investment universes. The natures of the companies that we invest in are very different. So, in essence, there's very little overlap between each of the individual themes. And so Meta allocates on an equally weighted basis to each of the themes that you have in front of you there. So allocating basically 20% to artificial intelligence and robotics, 20% to safety, 20% to the subscription economy, 20% to water, and 20% to wellness. And what we do is to rebalance that portfolio on a monthly basis. That ensures that we have consistent exposure throughout time, but also enforces, again, a profit taking discipline as we crystallize our gains when one strategy outperforms another on a monthly basis, and redeploy capital to areas we see with more valuation potential going forward. And again, there are strategies within Meta that are more cyclical or either more technology or growth oriented, others that are more industrial and more value oriented. So again, it's important to have these diversified exposures within our Meta strategy. And I think it's important as well to highlight performance within that context. So once we rebalance Meta on a monthly basis, we invest directly in the securities, so it's not a fund of funds structure. We mirror the underlying investment strategies on a continuous basis, which is very important, again, at the end of the day, to preserve performance. But you see through the various market environments we've been through, whether that be 2019, 2020, and year to date, obviously these types of strategies tend to perform differently, generating long-term attractive growth. However, obviously, if you think about the digitalization of the economy and the implications of remote working, obviously that had a massive impact on strategies that were exposed to cybersecurity, to digital safety, artificial intelligence and robotics. Likewise, if you think about process automation, supply chain automation, all of that had a huge impact, during the crisis, because a lot of the companies that we're investing were providing solutions to, again, the pandemic, and we've witnessed significant acceleration of certain companies that we invest with. Water, which tends to be a more cyclical strategy, more industrial in nature, obviously was really geared towards the end of 2020 to benefit from kind of that reopening of the economies, the normalization of the environment as the economy went back online, and again was ideally positioned to benefit from economic stimulus as well, with more cyclicality and industrial exposure. So, when it boils down to kind of our meta strategy, I think what's important is to understand that, within that context, over shorter terms, basically, performance can vary depending on the strategy. But what Meta is providing is a lot of consistency throughout very different market configurations and the market cycle as well.
Mhm. So I'm also curious, how do you cherry pick where you spend your time on? On that note, where do you see most opportunities in theme ideas across numbers of megatrends? So could you share some stories there? We're hoping to maybe you can get down to some names, and how to ensure the theme ideas does not become redundant over time.
Absolutely. I mean, that's basically, I think, a very important factor. As I mentioned, the ability to identify opportunities. We have an extensive team, highly experienced team with resources, to obviously stay on top of some of the trends that we think are reshaping the world, as we know it. That being said, if you think about, that's the first point. So within our thematic approach to the world, it's very important to kind of understand how you define your thematic boundaries with regards to kind of the investment universe. So taking very quickly the example of water, how we're identifying themes basically in relation to water. Certainly, if you think about population growth, but also the massive underinvestment that's happened kind of across the water chain, whether it be essential public utilities, water technologies. But what we witness clearly is a lack of investment that's more and more constrained by this imbalance between supply and demand of water. As we increase our sort of industrial applications, as we increase economic output, we need more and more water, whether that be for a cooling system within a power plant, but also, to the extent that we need a lot of purified water to produce a safety chip, a semiconductor. Purified water helps us separate those silicone wafers. So water is present the whole time and somewhat mission critical. And how we basically define the opportunity around water is investing across all this, the whole chain. So what we like is obviously the area of water technology. If you think about the digitalization of water, the ability to consume water resources far more efficiently, we think that that's something that obviously is having implications with regards to a lot of companies we invest with and invest in. So companies like a water consultant based in Canada called Stantec is a company that's providing a lot of services around basically how municipalities can make their water usage far more efficient. And with the Biden stimulus, there are $110 billion going into essentially, water services over the next few years. So again, that brings a lot of interest. There are also, if you think about water, very interesting example around sanitation. It's something that we, to an extent, neglected, during the pandemic. But actually, wastewater management is one of the most effective ways to measure viral charges at the community or municipal level. So, detecting basically the quality of wastewater. And we have a company in France that developed a solution called Eurofins that basically produces tests for wastewater quality for local governments. So, the sanitation implication for water, I think, was very important as well. So, infrastructure spending, sanitation requirement, I mean, are fueling our thinking when it comes to water. To give you an example for safety, if we think about safety, really safety is everywhere all the time. If you all remember your sort of social economic classes of Maslow's pyramids of needs, you have your elementary needs of sort of food, shelter, and clothing. And just above that becomes safety, which is an increasing area of investment, not only for individuals, but governments and corporations as well. So, if you think about basically the implications of digitalization, so with the number of connected devices rapidly growing, we estimate basically that there are sort of 20 billion connected devices in activity. But by 2025, we expect sort of 150,000 new devices to be connecting every minute, basically, to the internet. And that increases the attack surface substantially. And so we believe the trend towards storing data in the cloud, securing data centers, obviously providing remote access, all has huge implications in terms of companies having to invest more and more in security and cybersecurity solutions. There are two companies that we like a lot within our portfolios. One is a company called Zscaler, and Zscaler provides actually a very interesting cybersecurity solution. In that, think about it. So we're all sort of logging in through a WebEx today that tends to be somewhat centralized in terms of security, as our companies have installed firewalls to ensure that we can all sort of access appropriately and in a secure fashion these teleconferences. Now, Zscaler provides kind of the next generation of VPN. They've really transitioned to what we refer to as a zero trust architecture, where you're not ensuring the security, at the device level, or you're looking at basically logging on as a function of a specific identity at the device level, but you're looking to identify basically the individual logging into your system. So we've gone from a sort of a castle and moat organization to something that's entirely cloud-based and native and fully scalable. Another company in the digital area that I think summed it up during their latest quarterly earnings release was Varonis. Varonis is a data intrusion testing specialist, and basically what illustrated was that we've gone from basically an environment where a company has to secure one site for 1,000 employees to having to secure 1,000 individual sites for 1,000 employees. So a real paradigm shift in IT infrastructure is taking place with huge investments. If we think about artificial intelligence and robotics, clearly, we believe that those two worlds are converging very strongly. If you think about the advent of computing power, but also if you think about supply chain automation, things like predictive maintenance, the world of hard robotics is converging with the world of artificial intelligence and data management. So our strategy actually incorporates both of them. There are a couple of trends that we think are providing a huge amount of opportunity with regards to specialist providers. Now, if you think about, the advent of 5G, 5G may not be impacting our daily lives as 4G did with video streaming and obviously the ability to access content on an anywhere, any point in time basis. But 5G will have real implications at the enterprise level, not necessarily at the consumer level. The ability basically to reduce latency, but also the ability to deploy private networks through 5G is the next sort of industrial revolution in our view. It will allow, basically companies, factories to operate entirely independently and on a remote basis. So the ability to obviously have impacts on the supply chain, on predictive maintenance, for instance, on reducing downtime, are pretty huge with the deployment of 5G that we think will be a real catalyst for artificial intelligence and robotics and some of the companies we invest with. As will, the whole trend towards re-onshoring. Re-onshoring is really, something we've witnessed coming out of the crisis as the developed economies really have underinvested in their industrial footprints and relocated a number of their plants to low labor cost countries for decades. We're seeing a lot of interest in re-onshoring a lot of production. If you think about, the semiconductor industry with Intel deploying tens of billions of capital to have foundries in the US, with Samsung and Siemens going down the same lines in respectively Korea and Europe. I mean, we're seeing a lot of reinvestment, re-onshoring basically a lot of supply chains, but not only supply chains, also with regards to sort of medical IP. Certainly, that's something where we're seeing a lot of investment as well, medical automation and moving back essentially, supply chains closer to the end user is something that we think will fuel a lot of interest in artificial intelligence and robotics and companies that we invest with. Maybe just to touch upon a couple of things that we think are absolutely fascinating currently. We basically launched a strategy a couple of years ago that really focuses on embracing this consumer change. And if you think about, the subscription economy, we all subscribe to numerous services as consumers to access video content, streaming content, but that's having huge implications at the enterprise level as well. So, a lot of information service providers, but a lot of industries are actually shifting to a subscription-based model. So, you know, we're all operating via PCs today. So if we take companies like Microsoft with the advent of kind of Office 365 that's transitioned to a full subscription-based model, but also a lot of cybersecurity companies, even stock exchanges are pivoting towards subscription-based models to provide their technology and their data through subscriptions. Where in the financial services we subscribe to vendors such as MSCI, as FactSet, but basically whether you're an accountant, whether you're a lawyer, whether you're a doctor, we all subscribe to information services that are essential to what we're doing. And subscriptions provide companies with a lot of visibility around future revenue. So that's something that we're seeing a lot of interest in. Again, companies as diverse as MSCI, as FactSet, but also companies that have entered the sort of the connected fitness industry or providing services through subscriptions that we think are monetizing revenue in a far more stable fashion.
Yeah,
And maybe
this bill is quite relatable, I have to say. That's
okay,
why
so and
it's
maybe
very
and
relatable.
another relatable theme, and we believe this is an area that's really, really impacting, the world as we know it, is basically this whole concept around wellness. So wellness in body, but wellness in mind as well, that we think is somewhat underappreciated. If you think about individuals that are becoming far more health conscious, with a lot more technology at our disposal to monitor our health, but also governments that are shifting actually gradually their budgets from treatment. Obviously, in light of aging societies and aging populations, healthcare costs are increasing, and governments are trying to shift social security budgets from curation and the treatment of diseases towards prevention. So early diagnostics, providing subsidizing, regular checkups for individuals, participating in your gym membership, for instance. There's a lot more focus on wellness currently that's building up to be a pretty substantial industry. And so anything from digital health monitoring through to nutrition and future food, in our view, is something that really is presenting the future. I mean, within kind of the wellness economy, we launched a strategy a few months ago that incorporates companies as different as Oatly, which is your provider of alternative sources of lactose. So basically, Oatly provides oat-based milk, is basically a premium provider to Starbucks, as actually individuals shift away from lactose and have developed lactose intolerance over the year to more plant-based proteins. That's a great example, but also companies like Garmin, that provide a lot of the connected devices, whether it's through watches or other means, to basically be able to monitor our health far more astutely, and again, be able to be far more preventive in nature, learning to listen to our bodies, but also in areas like the mind, where we've seen an explosion of the practice of yoga, but also obviously online music, far more sensitivities towards outdoor activities, are all providing considerable opportunities in terms of the companies and the themes that we invest with.
So I think you've talked about a lot about the themes and a lot of names, which is very inspiring. But this is earnings season right now, and I think it'd be a reality check for some of the lofty valuations we are concerned about, because some of the most powerful secular trends which accelerated during the COVID are going to look bad for a while in the near term, when compared to their booming last year. And the likelihood of those companies experiencing the same growth as during the pandemic is rather low. For example, take online grocery delivery, for example. People are not afraid of leaving home and going shopping now. Another example, we just came in this week, Peloton misses expectation, not just because of the supply chain bottleneck. So how do you factor this into your portfolio? And could this mean a good buying opportunity? And maybe a follow-up question on that, do you have other examples where you see such hiccups in trends that you believe in?
Yeah, I mean, those are really great questions. I mean, and we believe that one of the merits in considering an active approach to thematic equity investing is to be very disciplined when it comes to the fundamentals of the company you invest with, but also the valuations. And it's something that we certainly have been very sensitive to. Going in the first part of the year, in light of inflation fears and the rise in rates and a lot of multiple contraction, to your point, in companies that had basically done incredibly well during the crisis. If you think about companies that operate in cybersecurity, for instance, but also healthcare, obviously providing directly a lot of equipment and solutions to be able to kind of mitigate the effects of a global pandemic. And to your point as well, some of these companies that have introduced kind of new ways to consume. Now, the digital consumer, in our view, going from basically physical to digital is something that is here to stay. I mean, if you look at companies like HelloFresh, so you mentioned meal delivery kits. Obviously, that is a company that embodies not only consumer change in light of becoming more health conscious, but also the ability to kind of provide meal delivery services through a very effective technology platform that, by the way, relies on subscriptions, is something where we've witnessed basically a lot of adoption. And that adoption is not going away overnight. Now, you did mention the earnings season um, coming out of for Meta, basically for all of our strategies. 80% of the companies we own have delivered results, whether that be sales or earnings, that have either been in line or above expectations. So again, fundamentals are somewhat robust actually, and actually we've witnessed certain areas becoming kind of more attractive in terms of valuation. Certainly, that being said, if you think about vaccination rates rising steadily around the world, COVID is no longer the number one focus of the market and investors. And we mustn't forget that the virus is still with us, and with the onset of winter, the latest figures certainly are not necessarily 100% reassuring. That being said, the two major problems facing economic agents currently are inflation and supply chain problems, and certainly that hasn't been resolved. That being said, some signs of normalization are beginning to emerge. And we'll be really paying close attention to the announcements of central banks with regards to rate policy. But we tend to use any period of weakness and unjustified performance to buy great businesses at a discount. If you think about certain areas of the market, if you think about some of the payment processing companies that actually have been sort of disregarded by investors, that have preferred to kind of allocate to the newer fintech models where valuations, in our view, are getting ahead of themselves. Some of the legacy companies, whether it be Global Payments, whether it be Visa, are actually trading at incredibly attractive valuation multiples and are highly exposed to kind of the reopening play and a normalization of consumer activity. That being said, to your point, when we hit our fair valuation targets, we're incredibly disciplined. We have a three-stage investment process, which is all about basically designing what you invest in, so designing your investment universe, obviously selecting the stocks, and then obviously acting, so sizing your positions, taking profits that are essentially, dictated by our valuation discipline. And that's something that obviously current areas of or momentary areas of weakness are providing us with some attractive entry points. It's true.
So finally, I wanted to ask you about the outlook of thematic investing. There's been concerns over thematic bubble given the exponential rise of products being set up. The mortality rate of thematic ETF is getting quite high, especially in the US. They come and go. In this regard, could you share a few words on the future landscape of thematic investing? How will it cope with a prolonged tech bear market? What are the biggest challenges, variables there?
Yeah, I mean that's a great point. If you look at our meta strategy, it's reasonably allocated across all segments and all sectors of the market. Now, that not may be the case for some of these more passive allocations that tend to be more niche and laser focused and generally used as more of a tactical asset allocation tool. That's not to say they don't have a utility function within portfolios, but from our perspective, what makes active management slightly different is certainly that valuation discipline, assessing your fair valuation target and taking profits, and also identifying companies where you have upside is something that's really going to differ versus a more static passive approach in relation to kind of defining a theme that's growing. Selectivity. So you mentioned it, the survival bias is key. Separating the wheat from the chaff, or certainly identifying the winners and avoiding the losers is part of our daily job. And if you think about some of the strategies that we manage, they're really designed to weather very different market configurations. So they're far more tactical than they're far more strategic, sorry, than tactical in nature. And if you think about the future and the outlook for thematic investing, I think it's personally very bright. That being said, I mean, it's important to thoughtfully construct a portfolio and think about the nature of the companies you want to own. We want basically companies that have attractive features such as greater revenue visibility, attractive growth prospects, but also sound balance sheets. And so we're very focused on capital discipline. And I think, in that respect, I do think thematic investment strategies provide attractive building blocks for a diversified portfolio. And back to my point, my initial point, we haven't gone into detail with regards to each of the sub themes, but I think one common trait is the resiliency. If you think about safety related spending, it's only increasing over time. I mean, we're all very familiar with GDPR here in Europe, that really imposes huge fines on companies that don't preserve employee and customer data, which is essentially the new gold. And we're seeing a lot of enforcement of that. So we do expect significant investments to continue around safety. Another example is, in Europe, actually, states have to equip themselves by April 2022 with mass notification technologies and systems. That's an area where we expect more and more investing and investments as well. So, there's no cutback in safety-related spending. So there's a lot of resiliency, an inherent resiliency in some of the trends in some of the trends and the themes that we invest in. Likewise, you don't unsubscribe to information services because they're crucial to you being able to do your daily job. Also, if you think about the need to access water continuously, that's not something that's going away. I mean, there are huge refurbishment programs that are being undertaken. And certainly, I mean, as maybe investors neglected water utility in 2020, certainly the reality has come to bite back hard in 2021, as that strategy has really outperformed quite significantly. Again, you cannot not afford to invest in automation and artificial intelligence. There are so many efficiencies there, and we see a convergence between the two. So, the long-term prospects for thematic equity investing, I think, are very bright if you construct a thoughtfully put together portfolio. That being said, in the short term, certainly what you want to do is sort the wheat from the chaff and invest in companies that are able to weather, the supply chain issues, pass on inflation costs through basically solutions that have strong competitive advantages. And again, minimize the impact of what we believe to be kind of a transitory disruption rather than something that's more structural in nature.
So this is all very interesting. Unfortunately, we have to stop here in the interest of time. A very big thank you to Sam Richmond Brown, Client Portfolio Manager of Thematic's Asset Management, for this wonderful talk. Thank you, Sam.
Thank you so much.
I hope our audience will leave better informed today and are potentially excited about the opportunities in thematic investing. So have a wonderful day and see you next time.
Bye.
Bye now.